Hey, thanks for tuning in. This is a weekend review for the week ending April 1st, 2022. Looking at a weekly chart of the S&P 500. We have the quarterly closes, we have the monthly closes, we have some weekly closes to look at. We've got a lot to talk about, so let's dive right in. 451.58 is the 20, 452.92 captured the 20. That is of note. The 5 just crossed above the 10. Okay, so one of my favorite short-term indicators for trend is the 5 crossing the 10, EMA 5 crossing SMA 10. Happened here in January. We just got the bullish cross March 21st. And now we've got a doji. We do have a series of higher lows. 415.12 is the weekly higher low. I would argue that EMA 5 and SMA 10 are high probability adds. We do have on the daily price trying to get above this triple top or whatever you want to call this. Rejected. 3 red days in a row. PPO, you can tell that PPO goes sideways, histogram curling down. ADX going lower on the move down versus back here in January to basically March 1. ADX was going up on the moves down and was going down on the moves up. This was confirming the trend was down, right? Same thing here. And what happens? Price goes lower and it keeps setting lower momentum ADX highs. And what you're getting as a result is this trough as price broke out. ADX set a trough, right? The day it broke out was the trough. And because it continued higher, that's what flipped ADX up. So at least we now have price going higher and ADX also going higher. That's a good thing. And PPO is above the zero line. The histogram is clearly bullish, more bullish than this period here leading up to the top. So that is of note, above all the moving averages and the 200 and the 40. The 200's been tested, right? So for them to fall through the 200 would be a red flag. There's an open gap here at 443.84. That is where I would be looking for a bid to start the week, Monday or Tuesday. Get turnaround Tuesday into that confluence. I will say, the 20 crossing the 40 is a bit of a lagging indicator, right? Like you had back here, when the 20 finally crossed the 40. In fact, that was literally the day after the bottom, right? It then rallied into the 40, which the slope was giving you the direction of the trend. Same thing you'll get here. So I'm looking for any dips into the 40 and the 20 for a strong buy. Ideally, they stay above this level right here, 441. If they overlap that level, it changes the structure because this could still be an impulse wave higher, which I do believe it is. Or it could be something like this. And it's done. I don't believe that is the scenario. Let's take a look at the quarterly closes here on SPY. We have an outside quarterly candle. We do have a TD9 setup again, right? So this is the 9th quarter. Come this summer, I'm not expecting much from the stock market, right? The sell in May and go away, right? Why May? Well, June is the last day of the quarter. Just like you had in March and February, you had this like dip and then a rally. It's gonna be very interesting to see if this outside bearish reversal candle gets confirmed. So if by June they're closing below 410.64, it then implies 3 to 5 more quarters of downside, down to sideways action. So this is a very, very big deal. And I will also say that generally speaking, when you get one red quarter, you don't get 2 in a row unless it's a 2008 type crash. So the setup for a 2008 type crash is there. That doesn't mean sell everything. It doesn't mean go short. What it means is we've got a TD9 sell setup. We've already broken the low of the previous quarterly candle, which has not happened since 2020. So a pattern, an uptrend that's been going on for 2 years is now being called into question. And really, if the trend, right, this higher low, higher high, and just price appreciation continues, price should hold the 438.53 level. So again, that 440 level is the level in which we want to buy dips, right? This 440 level is, valid on the monthly. It's valid on the quarterly, right? And I want to point out that price on the monthly held the previous low, closed above the 5 and the 10 after being below the 5 for 2 candles and the 10 for 1. So this is positive development on the monthly. I will say ADX set a trough. So right, as price is going up, ADX is increasing. As price goes down, ADX decreases. That's good. PPO is above the 0 line. It is in a bullish configuration. We do have a bearish cross, which some traders like to call maintenance mode, where basically you look for something like this to happen, where the trend consolidates. So I think that's where we are now, something like this to happen. Or just a triangle. Something like that to happen. We'll figure it out over time. No need to guess. I don't trade monthly candles anyways. These are just awarenesses. Okay, so let's move right along. We're looking for 440 this week. Would be a gift. Traded against the 441. So 443 versus the 441. IWM. We have a breakout, right? This is still a breakout. I know people don't want to talk about it. It's a breakout. The same way ADX, these peaks aligned with the bottoms. We now are kind of going higher, and that being the peak. But that being said, it was at 16. We have nothing here. There's no trend. Even the ups and downs, both of them aren't hitting trend mode. This is the most boring, dead money place for 2 years, right? And until price can get above this level right here, 209.05, guess what? Yep, you guessed it. We're staying range bound. We're going nowhere. And the weekly does a much better job of displaying this. Let's just put up my favorite tool here in TrendSpider, the rectangle, right? So obviously this thing was in range for 2 years. Price tried to break out, failed, got back inside the breakout range. This is very, very bearish, okay? So what we have now is a similar setup, all right? Very similar setup, but in the range for 2022, not the range for 2021. That being said, price has now looked above the 209 high and failed. Okay. Now, price is trying to get and hold the 5 and 10. They actually did that into Friday. And from a weekly standpoint, one could argue this is still just a bull flag, and really they're trying to build energy to get to 220. That's about all I think you could get out of this trade anyways. 220. If not, the trade's already over, right? I don't know. This to me looks like dead money until they can get above the 200, right? So they're letting the 200 come down. They're building lots of energy for a big move. I don't believe if they get below 200, this is going to be any type of a soft landing. If they get below 200, this thing will unravel. And I mean unravel to the downside. Right, they can get below 200 for a day. Close below, trick everyone. The next day they gap and go. Acceptable behavior. But if they get below the 200, I want to point out, we've now lost the 5. We've now lost the 10 on the weekly. We've now lost the breakout. Okay? lost the breakout, this would be very, very bad. But holding above 200 means that she's broken out of this downtrend, and that this sell the rally environment that existed from November to April 1, okay, is done. That is one scenario. Second scenario is the bull trap I just described. So I don't know. I don't own any IWM or TNA. I'm not a big fan of this sector, right? This sector is dead money. It's been dead money, and there isn't a lot that you can do to change that until we get a trend, right? I'm a trend follower. I'm not a range trader. I'm not going to sit here and buy at 180, sell at 280. Look, we can buy at 180, sell at 280. Like, that's not the game I'm playing. I'm trying to identify trends and hop on them and make some very, very, very easy trades. Ride them until they end, have my signals tell me that they've ended, and then cash in my tickets. And at the end of the video, we'll go over a couple of those trades once I'm done reviewing the indexes. But here's the IWM, and we will bring up the quarterly for all these guys. So IWM quarter, we do have a bit of a problem, right? Closed below quarterly 5 on increasing bear volume. Kind of came into the 10, so nothing wrong there. Maybe this is some ABC like that, a very shallow ABC. Okay, making this something like a 1 or 2, 3, 4, and one more rally up higher that would probably be very shallow. That would take price in some type of channel like this higher. All right, this is one scenario. I don't believe that this is coming, but it's possible it gets to like 286 this year. By the end of the year, 288, something like that. It's also possible that she just comes down here, right, a little bit lower, tags the 10, tags the 20, and goes to 170, maybe even goes to 150, right? But all I know is the low from Q4 of 2021 was 208.76. The low of Q1 2022 is 187, and the close was 205. So we've closed below the low. So to me, this trend is dead. It's done. There's no uptrend here anymore, right? From a monthly time frame, right? Because broke it back here, right? 211.54, and the low is 209.05. Okay, broke it, but closed inside. Okay, this time broke above, closed inside. Now we've closed below. So to me, this is a bull flag pattern, right? It can either be from down here or it can be from right here. Doesn't matter. And the bull flag pattern is failing. It's failing. So what does that mean? It means the low of the flagpole is in play. Whether that's down here at 101, whether that's down here at 146, that's what's in play. I don't have any other good news for you, sorry. Right? The sector is not going anywhere. And this is more evidence of that. There's nothing to trade here. So it's an avoid. And if you look at the things that are inside IWM, the things that are positively correlated to IWM, you do have the possibility that they have bottomed. But in my opinion, this configuration, just the histogram alone, is enough to tell me there's no ability to make money here, right? Even if you're bull, right? There's no trend. Even if you're bear, there's no trend, okay? And the histogram is telling me that the momentum is just dead. It's been dying every single month straight for a year, over a year, right? 12 months straight, it's been lower momentum than the month before. 12 in a row. Now this period back here was 19 months. So, okay, maybe we got 6 more months before there's actually someone buying IWM again. But that's pretty much what happens. People buy IWM, and then no one buys IWM for 2 years, right? Same thing here. January 2014 to the 2016. No one buys it for 2 years. So it's likely you got another year of hell in IWM, and by that time, monthly PPO will reset all the way back down here to the 0 line, right? Allowing there to be a higher move. Again, this is the 5-wave move that I see. This is not complete, right? This is just not complete yet, okay? As long as they stay above this level, there's another fucking move that's possible. Excuse my language. That's definitely possible, right? So I try to keep that off because it's so subjective. It doesn't really matter. All I can tell you is this is a bear flag. We're at the 20. We're breaking below. There is no trend. Avoid. Let's check out something that might have a trend, right? The Qs. Look at this. Look at this trend. Okay, now what is very interesting is this monthly PPO went from 15 now to 10. That's pretty good. 10 to 6 was the correction for 18 to 2020. Okay, 10 to 6. We've now gone from 15 to 10. Pretty good. We've got to the 20. Just like we did here, I think this is what we're in for. And if it's something even more triangle-like, right? Something like that. That's possible too. Either way, a very, very, very nice, clean trend, historically speaking. A great correction here for anyone who wanted to hop on this little move from here to here. Corrected 50%. Okay, did a 50% correction. Did the 61.8 correction. Okay, so this is 1, 2, 3, 4. It's possible we got one more wave higher. I'm not going to guess. I'm just going to say, look, weekly got down here. We're now curling up. I will say this looks like a reversal at the moving averages. This is not a good look. Okay, unlike SPY, it's above the 20 and the 40. QQQ is not. Okay, so this is still a bit problematic. You'd say the hourly looks pretty good to me. All right, could fall all the way back here to 351 or even 345. You look at the monthly close. Again, look for, we've got 3 lower wicks now. Okay, this is telling me that they're buying the dip. Just like you had back here, this lower wick, this shadow. All right, they're buying the dip. So if there's a big dip into 340 or even 300 again, it's a strong buy. This is where I'm looking for this inverse head and shoulders bottoming pattern to play out. Doesn't validate until above 370. Again, this was my final target, but that is off the table unless they come up and hit it this week. So I'll leave it in there just in case that happens. But I really don't think it. I do not think that is in play. What I do think is in play, price to either do one of two things this week. We've set an A leg, maybe something like that, or we continue higher. Something like that, all-time highs. Right, and this would be a very steep too, something like that. And again, would give us this inverse head and shoulders look. Break above gives us this long 3. Again, this is going to take time to play out if in fact that's coming. And then the final scenario, right? Something like that, right? Where we've already had the ABC up, and now we're getting the final impulse lower. Again, Elliott wave, I just described to you like 4 different outcomes. So there's no point in me presenting all of them to you. What I want to do is just show you the moving averages, how price is reverting to mean, right? We've broken the 5. That part of the trend is done. The easy part, where you just ride the 5. Easy, easy, easy. Right? Captured the 5, and for 2 weeks, rode the 5. Then broke it. Okay? I like the 10 as my barometer for these short-term trends. And ultimately, the 20 and the 40 for the intermediate. So that being said, uptrend, right? We still have a bull configuration, but a possible triple top rejection at the 200. Something to take note of and to be very cautious. And let's bring up the quarterly. Let's clear the drawing set so it's nice and easy to see. Outside candle. on volume. No, not outside. Apologies. Did not break the Q4 2021 high. Okay, so broke the low, closed inside. See, so that to me is huge. Huge, huge, huge. IWM did not do that. So the Q's once again outperforming. And again, right, above the 5. So, like, why would we assume this is over? Assume you're going to get bid at 350. That's how I view this. And the monthly we've talked a lot about. So we beat up the Qs, and I will want to bring up one thing real quick. Let's do the QQQ to IWM trade, okay? This has been going on forever, all right? This is what you always have to watch. You can never ignore. Did QQQ just put in a lower high? Is this a trend change coming up, right? This trend that's been in play for I mean, if I had more data, I could go back a long time, but QQQ's been outperforming IWM for about a decade. All right. I'm not anticipating that is going to change right now, but I will say the March 2021 euphoria in meme stocks, right, correlated with an IWM high. I pretty much have a peak here in fear. Maybe not. But this is a lower high, and we've now changed the trend. So until this thing can get above 1814, lower it goes, and IWM could be favored over QQQ from here on out. Unlike the last year, the whole year, it's made no sense to have any IWM. All right. So if that trend is shifting here, we need to know. So this is a chart to continue to watch, especially since IWM is breaking out. Now, given QQQ is held, looks better on the monthly, I would not bet against the Qs from putting in a new high on this ratio. Would not do it. But you look at the daily here, and we've kind of started to roll over, or at least pull back into mean. So we'll see what happens. Definitely a chart to watch. Let's wrap it up with SMH. So last month we got the doji on volume at the 20. Okay, I'm not capitulating in that environment. That being said, we did have this bearish Harami 2 candlestick pattern combo here that marked the top. I brought that up to everyone on divergence. We talked about this ad nauseum. We then started scaling in to SMH back here, February 25th, actually. This area is where we were buying. We scaled out right here. And I manage a few accounts that I did this for. And now we're at a junction, okay? Below this 20, I'm not interested until we fill this gap. And I can't hold my shares all the way back down. Another 7% lower, right? Because I've already done this trade. I've already made 15%. I'm already in. I've already trimmed half. Okay. Now where we are in the trade is at this point. Either the hourly momentum is going to flip back up at the 200. Right, which is what I am seeing now. Captured the 5, histogram curling up. Okay, either we're going to capture this, and this is some broadening formation stuff going on, which it definitely looks like to me, or we're going all the way back down here to fill this gap. And if we're filling that gap, it's going to be pretty ugly, and the gap is probably not the final destination. Okay? So that being said, to start the week, I'm looking at NVIDIA. I'm looking at SMH and SOXL. Those are the three that I like. the three proxies I like for this particular ETF. And let's go over to the quarterly. So, broke the low, closed inside, again, just like the Qs. So to me, this is like a flag, right? Bull flag on the quarterly. Not really telling me much other than the volume this month is insane. Absolutely insane. The volume this quarterly. It's just as much as they had, basically in 2018. I mean, more than the COVID lows, but it's what they had leading into the end of the correction back here 2018 that started this run higher. So obviously a trend that we can trade. Okay. And the monthly, just one more time, right? This doji, I like this. I like this look. I think this is a sector that you can trade. I think this is the dip that you were looking for. We are looking for this higher low. Again, we had this active sequence. Let's just take everything off, right? From here, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days straight up. That's well within the normal average. Now we've started a pullback. One could even argue that the pullback started here and that you really have that expanding ABC pattern that I showed on the hourly. Right? That's one scenario. The other scenario is something like this. I don't see why this couldn't be a running flat. And now we're about to start another 5-wave move lower. Again, I don't want to guess. I don't want to do any of that, right? We have those as awarenesses. We don't make those as buy sell calls. What we want is to play this hourly chart. It's flipping up. If it can get above the 10 right here, if it can get above this 266 to 270, you've got yourself a turn. Right? And what I'll be looking for is something just like this, where they break the higher low pattern, right? So I want to see them come up, break the higher low, and then rip. They broke it here, closed inside, and then rip. So that's what we're watching for in SMH. We're going to wrap up this video with bonds. TLT, yield curve inversion. I love that, right? So one of two things going to happen here. Either you're going to get, let's do it for the visual because this is really a beautiful thing for market symmetry. You're going to get a situation like this where the lows at 127.65 low break and we head down here at first to 119, but ultimately possibly to break this pivot low here. Okay. Definitely on the table. That being said, that's the bearish scenario. The bullish scenario, right, is we came into this level that we had identified. I had called this level out for weeks leading into this decline. You have two approaches towards that. You can buy the level, right? I don't like doing that. Or you can watch price come into the level. You can watch price put in a reversal, this doji, on divergence. You can see price flip up, right? Momentum flipped up, and then run. I mean, there's so many ways you can do this without guessing. You can add here, you can add on this dip here, you can add on this dip here. You could use the daily chart and say, you know what? Not until they get above the 5 and the 10, until the 5-10 cross. Hey, look, we had the 5-10 cross. Next dip came in. Okay, now we've got the 20. I mean, this is one of those scenarios where this is a very strong downtrend. No doubt about it. No doubt about it on the daily. But it could be reversing here on the weekly, monthly. And if we go over and look at the quarterly, okay, most volume on the quarter ever, or at least in my chart history, ever. I love to see that, right? So the TLT quarterly could have also just put in an ABC, right? So A, B, C. Again, at the quarterly 40. I mean, what a beautiful long-term setup for bonds. That's all I'm saying. Right, in TMF, the leveraged version, obviously, as you can see, goes through a lot more pain, but has a lot more upside. But yeah, so this is one I'm definitely looking to watch. I'm looking to sell at EMA 5 to start the week, this 133 level, then looking to buy back at around 131. But again, I'll be using the hourly to tell me right now any dips into the green or the blue line are for buying. Any rallies into this brown line and 134 are for selling. Okay, that's how I'm playing this to start the week. But this is something of note. This could be a huge change in character, and what we're going to do is look at this TLT versus SPY ratio, where we're going back and seeing dramatic underperformance. I mean, dramatic underperformance of bonds. Okay, what we're looking for is that changing? That's it. That's all we're trying to figure out. Is that long-term trend changing? I don't have evidence of that yet. Okay, the answer is still no. I want to look at the put-call ratio. We peaked here in January. Each time we're putting in lower highs and lower lows. All right. So to me, the fear is busted. We peaked. Fear peaked. Yeah, and let's take a look at performance, right, for the first quarter. Okay, so this you're looking at now is a start. These are the stocks that I follow, the sectors that I follow, and how they're doing year to date. And what you can see here is APA is up 51% for the quarter, right? The leader is obviously XLE, and the leader within XLE that I like to play is APA. GDX is doing okay. EMPH is doing okay. Bros is a coffee company. They're doing okay. XLU's defensive. Gold, Costco defensive. Bitcoin flat on the year. All right. XLP flat. And then what's very surprising is these triple leverage GTUs. SOXL down 50%. SHOP down 50%. FNGU, FNGG down 46%. DNMR down 34%. The Qs, right? So these things are just getting destroyed. ARC down 30%. Just getting destroyed year to date. But what's interesting is when you then go look at from when the Fed spoke, which is the 15th of March, all the names that were at the bottom of the list are now at the top of the list. So it's definitely something to take note of. Obviously, we could have peaked here the 29th, right? Because you see all these lines start to move down that same day, and we haven't put in higher highs since. Same could have been said with the 23rd, right? We moved lower, but then we just set a higher high. So to me, these things look good. The riskier assets, these things at the top here on my list, these are the things that noticeably are outperforming since the low. And it's definitely something to take note of and to keep an eye on as we move forward, because those stocks could be outperforming. And that's about it. So we'll catch you in the next video. And if you like this, hit the like button, subscribe to the channel. We'll see you in the next one.